With uncertainty over bilateral trade relations and its overall impact on the global economy, how are seasoned investors mapping out their strategy? Jim Breyer, the founder and CEO of global venture capital firm Breyer Capital, is a good example. Having a long track record of investing in and dealing with China for almost 2 decades, Mr. Breyer believes no one ends up the winner in a trade war. Meanwhile, how should investors strategically plan investments in the high-tech sector amid geopolitical uncertainties? He answers those questions. As a seasoned investor and someone who's been dealing with China for almost 2 decades, what's next? Will this round of discussion really bear some fruit for us?
No one wins when there's a trade war, and I'm optimistic long-term that there are structural changes that can occur between the United States and China. I'm not very optimistic about the short-term resolution because I think these are very complex issues. And when all is said and done, the world here at World Economic Forum has spoken and said it hopes the U.S. and China come to a very quick and very clean resolution. At the same time, I think there are so many different details that need to be worked out that it will still take months and months.
Talking about that, one of the things you heard from the Chinese Vice President Wang Qishan when he was interacting with the founder and executive chairman of the World Economic Forum, Klaus Schwab, in that hall right there, he was talking about China and U.S. so-called mutually indispensable. To you, is it really the case?
It is the case. I believe that there are certain areas where cooperation is essential. Worldwide safety, anti-terrorism activity, global policies. On so many levels, the U.S. and China should find ways to cooperate. At the same time, in certain technological areas, there is a space race going on, artificial intelligence being one example, and each side is playing a long game of trying to win. And depending on the segment of artificial intelligence, China is ahead in some areas, the U.S. is ahead in other areas, but right now, with the possible exception of some technologies coming out of India, it's U.S.-China, China-U.S. in terms of artificial intelligence leadership over the next 5 to 7 years.
For U.S. investor, what does that mean?
It means that to make the most qualified long-term technology investment decisions, when I'm doing due diligence on a new AI spin-out, as I was 6 months ago out of Stanford, half the team were graduate students from Stanford, but undergrad from Tsinghua. I have to compare that radiology AI system with technologies that I see in Beijing, at Harvard and MIT, and to make the most informed AI investment decisions, I believe it's essential to have deep insight into both the Chinese universities and technologists, as well as the very best U.S. and European universities.
But Jim, you may know, the world is not necessarily run by business people, globalized business people like you, but rather politicians too. Or should I say more by politicians when it comes to rules. So, do you have plan B in a way? That's something I have to ask you.
My plan B is to continue to do what I've been doing for 15 years in terms of investing in China and continuing to invest in the most promising artificial intelligence and 5G technologies in healthcare in the United States. I may, in certain markets, slow down investing, given market valuations. In other cases, when I think there is tremendous pessimism in the markets, I will accelerate my investment pace, and I will continue to make 10 to 12 new artificial intelligence investments in China each year, and about 10 to 12 artificial intelligence investments in the United States each year over the next 5 to 7 years. I believe artificial intelligence is that important.
Let me go to the question about 5G. Jim, you talk about your investment in 5G, quite active. That's, of course, among all things related to artificial intelligence, 5G is a very big name there. But you already see some stories related to that going on between economies that's not necessarily very encouraging. So how do you see that? It seems that you're investing in the tough areas.
Well, they always look the most promising, and they always feel terrifying.
Yes.
When I first made my Facebook investment, Mark Zuckerberg was 20. It was 2005. It was Series A.
Yeah.
I invested $12 million, including $1 million personally at 5 cents a share, and it was the most controversial investment I had made. And after 10 years on the Facebook board,
congratulations.
It worked well, but it was terrifying at times. 5G right now represents an enormous opportunity, particularly again around the medical and the medical science applications, to be able to send radiology images throughout China or in subsequent years throughout the United States or between countries and get them diagnosed by experts, and then get people in rural areas, people in the second and third and fourth tier cities in China, the ability to do medicine from a 5G perspective and get diagnosis.
But you know, that's once again a geopolitics challenging area, isn't it?
We will see certain internets and internet applications that are very specific to one country or the other. Early on, my partners and I invested in SenseTime in the Series A. They are the best and largest facial recognition company in the world. Only China could be a provider of that kind of data and sheer massive amounts of information that a facial recognition company can use, like SenseTime.
Right.
In the United States, there are medical and other artificial intelligence applications that are well ahead of what we see in China. And again, my job as an investor, take a very long-term view. Some investments will be focused just on the U.S. and their markets just on the U.S. Some will be just focused on China.
I see.
The Chinese-based investments, for instance, like SenseTime.
Right.
But I also am an optimist. I believe it's really important for students, faculty, leaders to spend time in both U.S. and China, because at some point I really do believe there will be global cooperation, cross-border investment again, but it might be a couple of years.
At the World Economic Forum this year, a lot of people talk about the short-term crisis management, which is happening in a lot of governments around the world. You know better than I do, Jim, about that. And then the long-term view about the building a sustainable and with potential economies around the world. So how do you see that balance in a way, particularly at a time when your country is also having some governance issue, while at the same time it is interacting with China to try to figure out its best position? As a business person, as an investor, and as one who stood in the bridge over the years.
Well, I really do believe the bridges need to be built, and I will continue to try my very best to continue to build bridges. As you know, I am on the board of Tsinghua. I'm chairman of the Tsinghua School of Economics and Management Advisory Board. Of our 30 members, 20 are from the United States, including Tim Cook, who I just ran into, and others. And of course we have Jack Ma, Pony Ma, and others from China. The bridges are essential. Education leads to bridges. Students studying in both countries lead to bridges. And that's what I can help control a little bit.
You're going to prevent the others to burn the bridge, right?
I really believe we should be building the bridges. It's not always the popular thing to do, but long term, that's what we should all be trying to do. I'm very passionate about that, and I love the fact that Chinese students come to the United States at universities where I am on the board, Harvard being one, and the learning, the empathy that is built, and vice versa, when U.S. students do graduate work in China. I believe this is so fundamental. And right now we're in I would say, a nuclear winter of sorts in terms of the relationships at many levels. But it's a very long-term, as you know, race in certain areas, but then a race to cooperate in other areas.
Jim, it's always a pleasure talking to you. A lot of insights and long-term thinking. Thank you so much, sir, for your help and also your support.
谢谢你。
谢谢。Our special thanks goes to Jim Breyer as well. Amid tensions and uncertainty, business from China and the U.S. are trying their best to avoid risks and still strive for the future. Among them is Jane Sun, the CEO of Ctrip, one of the world's biggest online travel agencies. She will be the last speaker for today's special program. She presents us a resilient picture of businesses in both countries, which are always pursuing global innovation. Take a listen. Jane, good to see you here.
Thank you for having me.
Well, you are traveling to Europe quite frequently, I would say, because of the development of your business.
Right.
Tell me, how typical is it for Chinese travel services to be able to come this part of the world and seek cooperation?
Yep. We made quite a lot of investment in this area. We made an investment in Skyscanner and also made an investment in a London-based technology company called Travel Fusion. Before we made the investment, the company was growing, but after we made the investment, it's exponential growth. So we are able to utilize the strengths of these European-based company to provide better technology and services to a broader audience in China.
Is that really the way to go, you think?
I think organically we have to stay very strong. Only when you become very strong, the other company will come to you and team up with you.
But of course, now people talk about geopolitics here. People talk about the growth of the potential of the economies here. There seems to be a number of challenges. So when you are developing overseas, expanding your services, of course, there are many things you need to balance about.
Yeah, absolutely. So we have seen different factors play different roles. First of all, the visa restrictions is very important for Chinese travelers' direction. For countries who give very friendly visas, they will get a lot of inbound customers. The secondly is the direct flight. Wherever we see a direct flight between Shanghai to European cities, they will attract a lot of customers. The third one is China Welcoming Program. We have seen that people in different countries, whoever have the best hospitality program, will attract a lot of customers. So Ctrip team up with the hotels, airlines to develop China-friendly program. For example, hot teas, slippers, Chinese breakfast, very, very small things, which shows the hospitality to Chinese audience will be very helpful.
Well, the world is very much opening to China. There are issues as a result of geopolitics. You heard about hard feelings toward the Chinese, at least in certain countries' policies or rhetorics. So how is that likely to have an impact on your business? How are you going to avoid any future risk? I think that's a sound question for any business leader.
Yeah, I think for travel, first of all, it's less political. No matter you're from China, U.S., Europe, people enjoy travel, right? So we want to use travel as a means to bring people from different countries together. I think there are a lot of misunderstanding about China. So Ctrip take on the mission that we need to bring more people from China to see the world, and also bring more people from the world to see China. Only then a lot of misunderstanding can be reduced, and global prosperity and peace can be promoted.
Chinese businesses are very strong these days. It's no secret that they have a lot of money, according to some of the media reports. However, when you are getting strong, people getting nervous about you. People get a little bit uncertain about what kind of future you're likely to bring, whether you're taking away what they belong to and what they have. So, Jane, Chinese business expand very fast. So is yours. How would you answer those questions?
Yeah, I think if you ask economists, 99% of the economists will tell you globalization is the most efficient way for the rich capital to find the most valuable workforce. And the combination of workforce plus capital generates the greatest wealth. And that's good for the world, good for the economy. However, in the process of doing that, I think China needs to go out more to let the world know what we are doing.
For example, on this platform.
Exactly. We are working so hard to bring the customers to Europe. That generates local opportunities, local workforce. And Ctrip alone employ lots of people in Edinburgh for the call center. So we're doing quite a lot to promote the global economy, global prosperity. And we need to let the leaders in different countries know, and also let the people in different countries know.
Our special thanks to Jane Sun from Ctrip. She's been demonstrating, together with other business leaders we have featured today in our program, the resilience of businesses, both from China and the United States, about strategic thinking in both countries, and also diversify their businesses to avoid any further risk. And that is all the time we have for today. If you'd like to see more, try to find us World Insight CGTN into your search engine, or check out our YouTube channel. Also follow us on Twitter, Facebook, and Sina Weibo. From me, Tian Wei, and everyone on the World Insight team, join me this week as I travel also back from Davos to Beijing. And we hope to see you again tomorrow.